Hello, everybody. Welcome to Thursday. The S&P 500 was up 0.7% today and really climbed a wall of worry. The European Central Bank raised rates 3/4 of a point in the morning. The market dropped and then it came back. We had our own central bank out in force today, talking negatively. A couple of Fed governors and Chairman Powell. Market kind of shrugged that off, which I thought was pretty fascinating. We also had first-time unemployment claims for the week were quite low. We haven't seen these numbers since May, actually. And again, normally that'd be a good thing, but what it does show is a tighter labor market, which can create higher wages, which can create more inflation, which gives the Federal Reserve more room to raise rates. And so now the market is looking at a 75% chance of a 0.75% rate increase on the Fed funds rate instead of 0.5%. Again, normally that would be a negative, but the market really took that in stride today also, as far as that goes. So I think what's happening here is that the market's looking at inflation maybe dropping faster than expected. We get the inflation number for August next Tuesday. And, we've seen oil prices come down. We've seen gas prices come down. We've seen a lot of the inputs that go into inflation coming down. We've seen areas of the economy that have slowed down a bunch that should help inflation pressures coming forward, like housing and those types of things too. So, that's what the market's looking at as far as that goes. I still think it'd be a little bit cautious here just because the market has been wrong, thinking that the CPI number is going to be low, comes out higher than expected, those types of things. We have 18% of our stock market exposure currently in kind of T-bill and ultra short-term bond ETFs. Just again, a little parachute just in case things do get, on the downside kind of coming down quickly. But we still have 82% exposure for a normal exposure in our models, which allows us to participate on the upside like we've had for the last couple of days. From a technical basis, the last couple of days have been important because we had two higher lows in a row, which is usually a good sign for a short-term reversal. Looking forward to that, but I'd like to see more. I'd like to see it break through some of these barriers. Love to see it get through the 200-day moving average. Then you feel like maybe things are reversing and that our overall primary trend is up, because when you're below the 200-day moving average and you're still falling, and that type of thing, it's hard to make an argument that our primary trend is up. So that's what's going on. It's a good day today, really. I mean, it just really overcame all of these different things. I think it is focusing on the data focused around inflation and a lot of precursors to that, which is a really healthy outlook, much better than listening to what the Fed's going to do, because they're going to be looking at the data anyway. They just don't want the stock market to go up, but ultimately, I don't think they're going to be able to control that just with their rhetoric as far as that goes. But we'll see how this plays out. But again, I'll talk about all of this tomorrow at my show, Talk Money with Tom, 12:15 to 1 o'clock Pacific time on YouTube. Please join me. You can ask questions as far as that goes, and I do a summary for what I see happening in the market for the week. So look forward to seeing you then. Thank you very much.